So doing a video today, and before I start, I want to read this comment that I just got, and it comes in from a gentleman named Glenn H. He says, I'm concerned about the fact that silver is not moving in concert with gold. I'm not a fan of David Morgan. However, he does know something about the history of gold and silver trades. He says that silver moves in concert with gold at about 85% ratio. Silver is not moving higher. I don't think it's a good idea to buy more silver now. Do what you want. I have a lot of silver. I will get rid of it if we get a sharp rise in the next 18 months, even if it is at a loss. Gold is the safest place right now. Silver is risky. This Jeremiah Babe dude needs to quit recommending silver and explain that it is a very risky asset. Right now, it is not performing like a monetary asset. First off, let me clarify something for everybody. Don't ever take advice from somebody that calls you dude. That's number one. I think most of you could figure that out. You do not take advice in life or financial advice from anybody that calls you dude. Secondly, let's talk about risk. There's no way silver is a risk. There is no liability to silver. And I'm going to tell you why silver is not a risk. First off, silver has been here on planet Earth for over 5,000 years. Secondly, silver has never been worth zero. So how can you call something a risk that has been here for 5,000 years, has a monetary value, is used in every field of technology, it's used in every automobile, every cell phone, every computer. I just took some of it for my health right now. How can you call that a risk? So again, don't listen to people that call you dude, and don't listen to people like this who have no idea what they're talking about. Now, I don't give financial advice. I just share with you what I'm doing, what I believe in, and every one of you, should make up your own mind and do what's right for your life. But let's talk about silver today. Ratio, 92 ounces of silver to equal 1 ounce of gold right now. When silver comes out of the ground, you're getting 10 ounces of silver for every 1 ounce of gold. Now, mankind set the ratio of 16 ounces of silver to 1 ounce of gold. So we had a 16-to-1 ratio that was set by man. And now we are at 92-to-1. The ratio is 92-to-1. So it's really, really extreme where we're at right now. But the bargain, the sale that we're getting with silver right now, I completely disagree with this guy. I think this is the time to be buying silver. I mean, I think the biggest uptick, the biggest gains are going to be in silver. I love gold too. I diversify. I own both. But if you're on a budget, get yourself into some silver, because this stuff is on a blue light sale. We had a little bump today. It's around, I don't know, 1525, 1530, somewhere in that neighborhood. It's on sale. It is absolutely on sale. And the question is, as we continue to see countries hoarding gold and central banks hoarding gold, what happens when they no longer can fulfill these orders? What happens if something economically happens here in America and there is a run to gold? What do you think happens when you go to the coin store? What do you think happens when you go to SD Bullion and they no longer have gold? People are going to the next thing. They're going to silver. They're going to gold's little brother. It is the poor man's gold. Not everybody can go out and drop over $1,400 for an ounce of gold today. I get that, but there's no excuse for anybody out there that cannot go out there and drop a little over $15 for an ounce of silver and have a hard, tangible asset in your hand today. So there's no excuse for that. Yet the ratio, 92-to-1, is telling you that that's where the deal is right now. And I think most people in the metals markets would agree that the deal is going to be in silver. And I like both, and I'm diversified. I like them both. But my next order will be silver at the end of this month. And I deal with SD Bullion. I have a link down below. I will be making another order with SD Bullion. And this one will be silver because it's on sale and because this ratio, 92-to-1, is convincing me that I need to bulk up more with silver. Being on sale and the ratio 92-to-1 is telling me that that is where the big gains are going to be. Now, if you are buying silver and thinking that next week you're going to make a profit, or next month or next year, You're not buying metals for an investment. You're buying metals for protection. You are betting against the debt. You're betting against the dollar. You're betting that there are bad times coming to America. This is an insurance policy. This is your life jacket. Do not buy metals hoping that I'm going to make a big profit a month from now. Okay? That's not why you buy metals. You buy metals to protect your wealth, and you buy metals to put away, not think about, and only use them when that emergency arises. And I'm telling you, that emergency is coming. The day of reckoning is coming. This collapse is getting closer every day. Most of you know out there, you can feel it, you can sense it. I have people, I had lots of truck drivers writing me yesterday. I had a personal friend write me on Facebook today who's an independent operator, has his own rig, and he's alarmed. He's very concerned that he's in big trouble. He says that his business is about as low as it was back after the 2008 crash, 2008, 2009. He says it's at that level right now. He's very concerned. Hey, these people have bills to pay. Okay, they've got kids. They got to put roofs over their head. They got to eat. They got car payments. People got to eat. And when I see a friend that I've known for many, many years who has his own rig, and writing me this morning and just telling me he's very concerned, I'm taking that to heart. I know it's bad. Let's talk a little bit about what's going on today. And of course, everything we're talking about is another reason why you need to have insurance, why you should have hard, tangible assets. Like gold, like silver, and there's no excuse to anybody out there telling me I don't have any money, I don't make that much money, I have bills, and cut out the Starbucks, cut out the fast food, cut out the weekend trip, cut something out, work a few more extra hours, sell something, have a garage sale. This is why we need to stop leasing $600 and $700 cars. This is why we need to, stop taking trips and putting them on our credit cards and having these big credit card balances and having to pay these credit card bills every month. This is why people need to bring it down a notch, kind of start living a little bit more conservatively. Do you need a 4-bedroom house when it's just you and your wife, or it's just you? Who are we all trying to impress? Do I need that emblem on my car? Do I need that name on my t-shirt? Do I need that name on my handbag? I mean, who are we all trying to impress? You're not going to care about impressing anybody when this economy collapses, because you're going to be hungry. You're not going to have any assets. Your money's going to be worthless. Your plastic credit cards are going to be tapped out, or the system is just going to be tapped out. So you need to be preparing. Article today on Zero Hedge. It's recession that's scaring the Fed. They're trying to make this recession as mild as possible. I didn't get to watch Jay Powell today, but from what I gather, he was very dovish. Expect the rate cut at the end of this month. I'm forecasting 25 basis points. Some people are still forecasting 50 basis points. I don't know how they're going to justify these rate cuts, but again, we have this all-time low unemployment, wage growth, a booming stock market, and this booming economy, yet we're going to get a rate cut at the end of July. So ask yourself, how good are things really if the Fed is going to cut in this environment, and how are they going to justify this? Dow Jones was up 76 points today. I thought that with this dovish news that the Dow would be up a lot more than 76 points. It's almost like they're running out of juice. The medicine is wearing off. They're not getting the big splash that they used to get when they would make these announcements. You would expect to see 300-400 points today on the Dow with this dovish message that the markets know that we're getting a rate cut at the end of July, yet we only got 76 points out of the Dow. There are only so many things the Fed can control, and most things are actually out of the hands of control of the Fed. They can't control what's going to happen with Deutsche Bank. They can't control what's going to happen with China and the trade dispute that we're having with them. They're not going to be able to control what's happening in the housing market right now. They're not going to be able to control any black swan events that we're going to see. But let me go back to the rate cuts and quantitative easing, which will come after the rate cuts. They're losing their power. They're not having the effect. You know, these rate cuts, the quantitative easing, they're not going to have the effect that they once had. And we kind of saw a little bit of that today. You know, the drug is not going to have the same effect. It's losing its strength. So they're going to continue to do the only two things they know what to do: lower rates and print more money. And the question is to everybody out there, what happens when you can't lower rates anymore? What happens when you print money and it stops having the effect? When the drug stops having the effect, you don't get the high that you once used to. What's going to happen? What is going to happen is you're going to see a massive collapse in the U.S. economy. It's going to be the hardest hitting collapse that you've ever seen in the history of America, and it's probably going to be the longest lasting one. And we're going to see unbelievable events unfold as this takes place. As we're going broke right now here in America, as we're heading into a collapse, as the collapse has begun, this was an interesting article today. Department of Health and Human Services, they are spending $100 billion per month. So as we are bankrupt, $22 trillion in debt, 200 plus trillion in unfunded liabilities, we are spending, get this, $4.9 billion a day with the Department of Health and Human Services. That comes out to $196 million an hour, and that's 3.28 million a minute. And you want to know why America is broke? We have even more concerns today. This was also on Zero Hedge. New York City, on a quarter-over-quarter basis, pre-foreclosures are up 31%. There are 3,070 properties entering pre-foreclosure for the first time in the second quarter in New York. Foreclosures are likely to increase in the coming quarters. According to this article, Brooklyn saw a 43% increase, Staten Island saw a 43% increase, the Bronx saw a 41% increase, and Queens saw a 17% increase. So we are seeing pre-foreclosures. That means these are properties in default in New York City, up 31%. So you have nearly 3,100 properties entering pre-foreclosure for the first time in the second quarter of 2019. And as I said earlier, this article goes on to say that they are expecting an increase in coming foreclosures. So as we're about to witness a rate cut during this economic boom that pretty much puts us in the twilight zone, I want to go over an article that was on Axios today. It's very interesting, and I want to bring this to your attention. And this is just another canary in the coal mine, another reason why you need to be educating yourself, doing your due diligence, and really protecting yourself. Institutional money managers and retail investors around the world have pulled a net $140.6 billion out of the equities market in 2019. The twilight zone environment in which equity prices have risen despite net selling of stocks by investors is taking place around the world. Investors have bought bonds, a net $255.5 billion so far this year, even though more than $13 trillion of bonds currently hold negative yields, meaning investors are losing money on them. So people are so fearful that they're actually going into these bond markets and losing money. I don't know who would buy a bond right now, who would tie money up in a bond and lose money. I mean, these things aren't even keeping up with the rate of inflation. You're losing money. I would definitely, without a doubt, be putting money in precious metals. So what does all this mean? It means that people don't trust the stock market. And this is scary. When people lose trust, and they're just starting to lose trust in these markets. But ask yourself, what happens when they really lose trust in these markets? What happens when people or more countries around the world lose trust and faith in the US dollar. I mean, trust is faith. When we start losing faith in our market system, when we lose faith in our dollar, we are going to have massive trouble here in the United States of America. Everybody right now that has a brain is embracing safety. People who know what is going on are embracing safety. This is no time to be taking risks. This is no time to be gambling. This is no time to be wasting and spending money on crap you don't need. This is serious business. This is your future. This is your life. Your kids, your family depends on this. You as a human being are depend on this, your future. Serious events are coming to America, and it's all going to be based or a result because of this economy and this debt. Debt is going to be the killer here. Okay, it's not going to be trade wars. It's not. We blame so much on so many different things. It's the trade war, it's this treaty, it's this country, it's this, it's that, it's debt. It's nothing more than debt. We have too much debt here in America, and there's no way to pay it off. It is absolutely impossible to pay off this debt. We are past the point of no return, and now America is going to feel the ramifications of living on a credit card. And at some point, you got to pay up. And the day of reckoning is coming to America. America is getting tapped out. Investors' safety preference is government bonds, while risky high yield or junk bonds are seeing far less performance. Safe, short-dated government bonds have returned 2.4% year to date. 2.4% year to date. Now, I think the U.S. government says that inflation is around 2%. We all know it's around 10%. So you are just taking a beating. Investors have also invested a net $148.6 billion into money market funds that collectively yielded less than 1% this year. So this is how worried people are getting. They'd rather make less than 1% than to gamble at the poker table. They'd rather earn 2.4% in a government bond than to gamble in the stock market. So, who's gambling in the stock market? Listen, it's all an illusion. It's all propped up by corporate buybacks. There's very low volume of trades going on. There's just a massive amount of corporate buybacks, which is propping the stock market up. But worriers have a good reason to worry. New York Fed's recession probability index rose to 32.9% in June. Every time since 1960, and remember this, every time since 1960, every time the index reached 30%, a recession followed. For the average person out there, you've got to figure out what you're going to do to protect yourself. And again, that I've said many, many times is my biggest fear is pensions. Nobody talks about pensions. These pensions are in massive trouble. These pensions are being robbed right now as I speak. And these pensions are heavily invested in these markets. If these markets go down, if they get rocked, more than likely your pension is going to get severely rocked. And right now, more than likely your pension is unfunded. So what is going to happen to these unfunded pensions when these markets get rocked? They're going to get devastated. And most people are unaware because they just don't think for themselves, or they just don't care to think. Most people are unaware that their pensions are going to be decimated by the time they retire, that you're going to be lucky to even have a part of your pension existing by the time you retire. So I'm going to wrap this video up. In closing, there's not much any of us can really do. What is coming is unavoidable. We all know that. Nobody is going to be able to stop it. No government can stop it. No central bank is going to be able to stop it. This is unavoidable. There's no turning back. We are heading, right into the iceberg. And when we hit it, we're going to hit it very, very hard, and massive damage is going to be done. So, worry about yourself, worry about your family, take the preventive measures that you think are necessary, and do that. But if you think these financial institutions are going to be there for you, if you think your pension's going to be there for you, if you think your bank is going to be there for you, if you think the government's going to be there for you, I truly believe you're wrong. And I hope I am wrong. I hope that this is all avoidable, but $22 trillion in debt, $200 trillion in unfunded liabilities, global recession taking place across the world, China with massive debt, Europe, massive debt, Latin America, massive debt. Nobody's getting out of this unscathed. So condition yourself right now that bad times are coming. Prepare yourself, prepare your family, and make sure that, you are saying your prayers to God, walking closer to God, and make sure that you're doing the best that you can mentally, physically, spiritually, and financially, because your life, your family's life is going to depend on it. And I really seriously believe we're going to see some very, very horrific times here in America. And as you know, I'm going to just keep saying this on a daily basis. Get ready. Get prepared. It could happen tomorrow. It could happen next week. It could happen next year. It could happen 3 years from now, 5 years. Nobody knows. But what we do know is we're getting closer to that day. Just take a look. Read what's going on. Just pay attention to the warning signs. The canary in the coal mines are dropping dead all over the place, while people continue to live in their little bubbles, their little parties, oblivious to what's really happening in the world. Listen, if you're 400 pounds and eating a box of Twinkies, what are you going to do when the lights go out? What are you going to do when the government subsidy stops? What are you going to do when the grocery store shelves are empty? What are you going to do when violence and danger is coming, to your house? You can't even walk. If you can't even move to get out of the way, you are going to be a victim.